Hello everyone. In today's video we are going to discuss about what are derivatives. So let's get into the video. So what is derivative? Derivative is any kind of financial security with a value. So it is a kind of security which derives its value from an underlying asset. As the name suggests that the derivative is an instrument which is deriving its value from any kind of security, and that security is called underlying asset. So for example, if we think about say there is a mutual fund, we all know about mutual fund. So in mutual fund what happens, there is a pool of investors who invest certain amount of money and make a pool of money, and then there can be the case that they invest in different kind of sectors, or they invest in a particular kind of portfolio. So suppose in our example they are investing in a particular kind of portfolio, and that portfolio is replicating index, say Sensex, Nifty, or any kind of index. So it means that this portfolio which is replicating the index is deriving its value from the index value, and the the income these all investor will earn. So it depends on pool of this money, and this depends on the performance of portfolio. So it is also a kind of derivative that we can say that yes, this pool, and they are issued some security, or in case of mutual fund units. So we can say that these units or security, they are deriving their value from underlying asset, and that asset is portfolio which is deriving its value from the index. Alright, so this is the main crux of what are derivatives. So derivative itself is a contract between two parties. So two or more parties, if there is an exchange involved, then there are more than two parties, and the derivative derives its value from the fluctuation in the underlying asset. And this second point, we will get to know when we will discuss about various kind of derivatives. So this is the whole chart of about what is a derivative market. So it can be the exchange traded. It means that there is a central counterparty. So there is the involvement of central counterparty, and that central counterparty is exchange. So let me explain this this statement to you. So there is an exchange. Sorry for this. Yeah. So there is an exchange, and there is buyer of that derivative instrument. All right. So this is the buyer of that derivative instrument, and this is the seller. So what the seller is doing, the seller is contacting the exchange that yes, he wants to sell a kind of derivative instrument, and say XYZ. Let's not get into the technical terms. I will explain it in further videos. So yes, this is a seller, and he wants to sell this instrument XYZ, and he approaches exchange, and then there is a buyer who wants to buy the same instrument with same kind of maturity, all everything is same at same price, and then exchange matches the demand and supply. So this is all the kind of demand and supply concept, and we can say that there is a less chance of counterparty risk. Okay, because that risk won't be borne by the buyer or seller, that risk will be borne by the exchange. All right, so this is about the financial exchanges part. So in financial exchanges we have future exchanges and security exchanges. In future exchanges there are options and futures. So and in security exchanges these are shares, warrants, options, and structured products. And in over the counter market, what happens that the seller and buyer approaches without any kind of intermediary. If there is any intermediary, that will be a dealer, not more than that. Okay, so here there is an exchange and here there is a dealer. Okay, so this is about the over the counter, and in over the counter usually commercial banks, investment banks or brokerage houses are involved. So here we have forward rate agreements and interest rate caps, floors, collars. So these are very technical instruments. That's it about the derivatives introduction, and this will be the base for the further videos. And I think that you have liked the session, and in further videos I will explain about future, option, forward. Forward and future are almost the same thing. There is just a slight difference, and then is swaps. Okay, so thank you very much for your time. Take care.